What's up, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 10th, 2021. Please go ahead, click the like button on this video, and go ahead and subscribe to my channel. That way you don't miss any of my future videos. Today, we are going to talk about the price action in the indices. We're going to go under the hood, check out our sectors and style factors, talk about some of the wonkiness in the price action today. Before we do all that, quick disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, let's dive in, team. So S&P 500 finished the day up 0.94%. We had the NASDAQ QQQ finishing up 1.09%. We had the IWM small caps finishing down 0.28%, our worst performer on the day. And then we had the Dow Jones finishing up 0.59%. Volatility declined on all of these indices. And you can see we had some nice breadth across the board other than these small caps. So it's interesting. It's like, you can say like, oh yeah, we had nice breadth across the board except for the small caps. But look at how many stocks are in the small cap indices versus in all the other indices combined. So basically, on any day when you have small caps declining and the breadth is, pretty poor, it's basically it's a market decline unless you're in, concentrated in those mega caps, in the tech names, etc. So let's take a look. Finviz heat map. Large caps looked fantastic. So we had Apple up another 2.8%, Microsoft up 2.83%. Amazon and Nvidia were laggards today compared to some of these other mega caps. But the big story for today was a lot of strength in consumer defensives and consumer staples. So let's check that out. When we go to our sector map, we can see the XLK ETF is now our leader. And that one is very highly concentrated in Apple, Microsoft, a couple of these big names. So that one, you can see really nice performance. Home builders, number 2 slot, semiconductors, number 3. And today we had the consumer staples of 1.69%. So definitely the composition of this rally, it's very, I don't want to say narrow, but basically for every stock that's really like making new highs, breaking out, etc., there's other stocks that are really crumbling. And most of the more risk-on stocks that a lot of active investors and active traders traffic in, those are kind of the ones that are really lagging behind. So on the laggards, we had this ARK Innovation ETF down 1.6%. We had ARKW down. We had the blockchain ETF down, cannabis down, solar energy down. So yeah, a lot of these more risk on, more speculative areas in the market were decliners today. KWeb, interesting enough, was up 1.19%. I did see a lot of call flow for FXI, for EEM, and for KWeb as well. So we'll take a look at that when we go to our options order flow. Style factors. We had the growth style factor up 0.98%. We had Min-Vol up 1.05%. So Min-Vol and Momentum were our leaders, up 1.06% and 1.05%. Laggards, we had cyclicals only up 0.01%. International value was a laggard as well, and then high beta was only up 0.29%. So the composition of the rally, kind of risk on, kind of not. To me, what it really seems like is most active managers, they're kind of getting out of all their speculative exposures because a lot of those are less liquid, they're smaller cap. You're more so sticking your neck out when you're in some of those exposures. And they're just kind of moving over, let me get into the index, try to participate in a Santa Claus rally, and get my performance bonus into year end before we have to deal with 2022, which is going to be a year where the Fed is really tapering. So yeah, you can see these investors are really getting concentrated in some of these megas, and these megas, they're the easiest to kind of exit out of if and when you want to go to cash. They're very liquid. Let's take a look here at our index action for today. And let's check it out. We had a huge vol crush yet again. And take a look at this. The VIX really getting pummeled. Now it's down to an 18 handle, 18.69. So we're out of that elevated volatility regime, so we shouldn't really expect these huge ranges in the market anymore unless that VIX really picks up. Trend model is at a +3. And take a look at this price action. So we had some big dips throughout the session, but we ended up closing above this 4,700 level. So we closed out at 4704.75. But keep in mind, until this Fed meeting, we are just trading inside of value. So we did not make it back to the high of, I believe this was Tuesday or Wednesday. Yeah, this is Wednesday. So we did not make it back to that high, but hey, we didn't break down either. Yesterday it looked like, oh my gosh, maybe the market's going to break down. My whole Twitter feed got like super bearish. Basically every day it's just been like people switching back and forth from like super bearish to super bullish. But yeah, we ended up getting some follow through into the close. And yeah, some really nice price action for today at the index level. So let's take a look at the hourly chart. And you can see here that, yeah, really we had a dip in the morning. And we sort of caught ourselves around lunch. And we continued higher throughout the day. Let's take a look at some of these other indices. Let's look at the NASDAQ. Let's check out our NQ. NQ finished up 1.07%. This is our weekly chart, excuse me. Weekly chart looks pretty good though. Yeah, NQ also finishing inside of value. So yeah, it's, for my process, something is very bullish when it's trading above value. Inside, it's really just a neutral trend. So yeah, it might seem like, oh my gosh, this is crazy action. But yeah, the NASDAQ basically just put it in an inside day. So yeah, NASDAQ above that monthly point of control, but we were not able to make it back up to the top of value where we were yesterday. Then the Russell 2000 trading down today basically erased, we had a 2-day rally off the lows and then 2 days where we just got right back to where we started. This is pretty risk off right here. And then the Dow Jones up 0.64%. Dow Jones not looking so bad, holding up pretty well here. So for a strong tape at the headline level, kind of like a mixed bag. And what I'm noticing is like a lot of these growth stocks, for instance, like SE, Obliterated, Cloudflare. This one was super overvalued. I really don't know what happened here, why this stock just went on this crazy run, but it looks like we're pretty much going to erase all of it, which to me makes sense. But yeah, I don't know what was going on with this one over here. Now let's take a look. Yeah, some of these others like SoFi, this one was a darling getting killed. Affirm, this was another darling. DigitalOcean. So yeah, there's still a lot of carnage out here. And then we did get the news also that Elon Musk sold more of his Tesla common shares. And he actually said today, like, I'm actually considering stepping down from the CEO role and just becoming an influencer. And Elon Musk, he just says a lot of random things. But I mean, when you see the CEO selling his stock like hand over fist, then he's also saying, hey, thinking about actually quitting my job. To me, that's not really a buy signal. So I actually opened up a put spread on Tesla today. Because I keep seeing this stock, it's made a high, then it made lower high, lower high, lower high. And then we're kind of making these equivalent lows. And you can see this was actually a lower low right here. So yeah, ended up putting on a put spread for Tesla. Basically what I did for today was I took off a lot of exposures. So today for my options trades, I had some MP December calls. I closed out a third of them for 440. I had paid 410. And this was me just trying to get a target on the books. Let me just take some off. MP, this chart still looks really good. So MP's kind of been getting hamstrung by the weakness in the small caps over the past 2 days. But it still looks really good. We're trading above value. It made a relative strength new high. So yeah, looking really good. Some other names that look good after today's action. Ford was up 9.61%, closed out almost on the highs. Really nice relative strength on high volume. GM, this is the company that is doing a partnership with MP. Really nice strength here as well. Then you can see one of our members today was trading Walmart. This one, nice finish for Walmart inside of value. But XLP, take a look at this. XLP out to a new high. So this is great action for consumer staples. I guess you kind of have to ask yourself the question, like, you know, for my trading style in particular, am I going to be super active when consumer staples are leading the market? Like, you certainly could be. Like, you don't want to like discriminate and be like, oh, well, I don't trade consumer staple stocks. Like, I do a lot, but that's not really the kind of environment like where consumer staples are just like leading the pack. That's typically like a more risk-off environment. A lot of times that precedes sell-offs. So that's not really like, I'm not going to like go all in and, you know, start trading those stocks, especially if I'm not like super early on them. But yeah, that's kind of the tape that we're in right now. We got staples leading and growth really selling off. See, I took a target on my MP. Bitfarms closed this one out for a loss. That's really a small position. But yeah, Bitfarms, this one had momentum. A lot of these crypto assets, that's the other thing too. Crypto is just very weak. So in a market where like everything that's risk on is selling off and everything that's risk off is kind of like remaining buoyant, basically my decision for today was, let me just get out of the way of the market a little bit and then reassess. Because the worst thing, and I hate when this happens to me, is when you're kind of sitting in some exposures and you're like, well, the market's still buoyant, but I'm kind of in the wrong exposures. So when that happens, I just try to take things off, be like, you know what, let me just reset a little bit. Let me go more to cash, and I can deploy that in whatever show momentum. Yeah, Bitcoin not showing any momentum. Ethereum, yeah, it's basically on the verge of breaking down. And every time it's gotten to this level, it's just wicked out and inflected higher. But we don't know if that's going to happen again. I mean, this could certainly break down. We don't really know. See, I took off my Bitfarms, got long that Tesla put spread. Yeah, and then on the common stock side, GBTC was one of my core positions. You can see it's a 3-star position for me. I took it off for a small winner. Nice, but I think there's a reasonable chance this heads lower into the Fed tightening cycle. So this is another thing, you know, it can happen to a lot of traders where you're just in all of these risk-on assets that were doing really well in a certain market regime. And then the regime changes up and you stay in those. And then it's like, oh gosh, like I'm in all the wrong asset types. So I kind of felt like, let me get out of some of these assets that, you know, now are starting to show relative weakness. So yeah, closed out my GBTC. That freed up a big cash balance for me. This ETHE, closed that out. This was a small ad that I put on. Closed this one out for a loss. But I have a much bigger core position I've been holding for a while that I added, you know, a long time ago at lower prices. So yeah, closed out that like additional ad that I put on. Closed out my Solana for 175.93. I'd paid 162 for that. Small speculative position for me, but one that I don't want to have on if I think that crypto could be a little bit weaker in the near term. So let's pull this one up. Yeah, let's check out this chart for Solana. So I'm noticing this with a lot of the, you know, just cryptocurrencies, altcoins, etc. Yeah, this one's trading lower than where I closed it out. So yeah, Solana, really nice runner throughout 2021. But now it's starting to sort of lose its mojo a little bit. It's coming into support, hit this high of about 250, and it's just been red candles ever since. So could this go lower? Absolutely. So I'm just trying to be prudent, take some risk off into year end. And then I closed out my Airbnb for a nice little winner, 177.45. I'd paid 169.51. Airbnb had a pretty nice close though. So Airbnb, can always add this back in the future. Take a look. Yeah, Airbnb put in a nice green candle there, but got rejected at this 20-day simple moving average. So we'll see what happens with that one, but overall not looking too bad. So yeah, I just got a bit lighter. Now I'm sitting on about 43% cash. If I decide to sell my Ethereum, which I'm currently still sitting on, you know, that'll put me at almost, you know, full cash balance. So yeah, this just allows me a little bit more flexibility into next week, into year end, into 2022, etc. As I could also feel like my win rate on these trades in these different areas of the market, like it's coming down. So I want to make sure if my win rate's coming down, that I'm getting a little bit lighter. So let's see. Let's go to our options order flow. Let's see what was coming down the pipe. Let's see. Okay, let's go to our options races. We have today's combined flows. Let's check it out. We have Tesla in the lead as always. Amazon, Apple. Apple saw a ton of flow for this one today. Yeah, 2.6 billion in Tesla flow. EM, yeah, I was seeing a lot of this coming down throughout the session. EFA, Microsoft, HCA. Let's take a look at that one. HCA, is that a healthcare name? Yeah, HCA Healthcare, looking pretty good. Yeah, definitely shaping up here. EM, yeah, just kind of consolidating, but I saw a lot of call flow coming in here. And kind of our normal suspects. EFA, I believe that's the XUS ETF. Yeah, what is this one? Large and mid-cap developed market equities excluding the US and Canada. See a lot of international flows today. Let's check it out. So Apple, of course. Apple's like the new Tesla in this market environment. 175s, 125s, 175s. A lot of flow coming down the pipe for Apple. Nvidia. Mixed bag. A lot of flow though. And Nvidia was kind of weak today as well. Yeah, so Nvidia is starting to look, yeah, like there's potentially some distribution going on here. EM, look at this. So this is definitely noteworthy into next week. December 48 strike, January 40 strike, January 37 strike, January 36 strike. Yeah, so one theme that I'm looking out for is there were certain areas of the market that were just horrendous throughout 2021. China and emerging markets in general would be one of those areas. Nobody wants to go into year end holding those on the books because nobody wants to seem like, oh, I was holding these throughout the year. But now that the year is about to roll over, maybe in 2022 these will have a run. Like EM, the weekly chart doesn't look so bad actually. So yeah, I'll have to see. But yeah, a lot of call flow coming in for EM. Tesla mixed bag. We are seeing some puts coming down for Tesla now. Lucid, a lot of puts. Lucid is another stock that, yeah, it's kind of breaking down. This is the weekly chart. So could Lucid end up going back down to like, you know, in the 20s? Certainly could. Yeah, it's kind of just like rolling over. I would not be surprised if we saw this one back at, you know, in the 20s soon. This kind of reminds me, like this weekly chart reminds me of SoFi. So you have the huge bump, then we revisited it. Look at SoFi. Huge bump, revisited it, huge bump, and then now we're back down on the lows. So yeah, Lucid, some of these EV stocks, not really looking so good. Rivian is trying to like build out a base here. Ford, a lot of call flow coming in, which is good. 20 strike, 20 strike. Yeah, March flow coming in. That's awesome. So yeah, Ford and GM are beating out like Tesla, Lucid, and all those more like high flyers. So that's definitely noteworthy. Alibaba just all puts. Let's see what Alibaba actually did today. Yeah, and look at that. Alibaba is like trying to go sideways here. So this has just been like an awful stock. Hey, maybe now that like every single person has tried this and been washed out, maybe now it'll make a move. Who knows? Let's see, we got GME, IYR. Yeah, call flow going up for IYR into January. And IYR, this is another more defensive area of the market that's showing some nice relative strength as of late. So yeah, definitely more analysis to come into this weekend. I think this weekend is going to be a lot of fun. Just like dive in under the hood. There's so many things changing under the surface. You know, in the fixed income market, you know, in terms of the currency market, cryptocurrency market, composition of the rally. So I'm going to be going very deep on all of this. As usual, I'll be putting out, you know, our weekend market analysis video for all Pristine Capital members. I'll be putting out my weekend watch list as well. So stay tuned for those, and hope you all have an awesome weekend.